Yeah.
All right. Well, we're going to get started within a minute, and I know we are going to keep this to German time or Swiss time. So we're really going to start on the button. So how are you doing, Hussein? Why don't you just tell us where you are, and then that way we can just have a little bit of a chit chat before we kick off into the real important things.
Thanks a lot. Thanks, James, for having me here. You know, like right now I'm in Brussels.
Yeah, you're in Brussels.
Yes, but I teach mostly in Amsterdam, of course, online at the University of Amsterdam.
Yeah,
I'm teaching.
How's the weather there? Just informally.
Not so good, I would say.
Yeah.
We had a lot of sun like last week.
Right.
But this week is a little bit, I would say, rainy, and I think typical rainy day Brussels. I think perhaps, you know, like in Amsterdam and also Luxembourg, the same, right?
Yes, well, we are certainly raining up here as well. Valentina, how's the weather over there?
It's raining.
It's raining as well.
Yeah.
Yep.
As usual.
I think in time we'll have our spring weather soon. Well, it's
hopefully
1600, and if I can just invite our support to record the session, because I know we don't have everybody present who wanted to be here. So I think we need to record this session.
Recording. I can see the recording.
Yes, it is recording.
The recording button is on. So now we're really formal. Okay, well, welcome everybody to this discussion here on cryptocurrencies and blockchain. And I would like to first just quickly note that this is a European Business University hosted event. The European Business University is a non-for-profit institution located in Luxembourg, not sunny Luxembourg today, but we are at the Chateau Wild campus, and we have a very important mission, and our mission is to really bring education to the world. So please take a look at what we do. We're very, very determined to make sure that education becomes and remains accessible, equitable, and affordable. So on that note, we have been offering scholarships to individuals around the world. We to date have more than 400 students in our scholarship program, students from countries around the world. We also, of course, have a doctoral program, a master's program in data science and AI and MBA. We offer a host of academic programs, but our key mission, our core mission, is to bring education to the world. And on that note, I'd also like to say that we want to bring enlightenment on this topic regarding cryptocurrency and blockchain. Let me quickly introduce myself first, if I may, and then I'd like to introduce my colleagues who are participating in this forum. And then we're going to kick off with a number of questions. There are some housekeeping elements we have to address, such as if you have questions, please post your questions in the chat feature. We will try and get to all the questions if we can. But please be patient if we don't. And we're always, of course, trying to make sure that everybody has their questions answered. My name is Dr. Mully. I am the academic dean and president of the European Business University. I have been in academia long enough. I don't want to say when. Every now and then I keep saying, oh, but I taught you, didn't I? I taught your sister, or I taught your brother. And every time I meet somebody, this kind of tells something about how long I've been in academia. A little bit over more than 20 years, let's put it at that. My background is in finance. I used to work with the George Soros Quantum Industrial Partners as a portfolio manager. And I have been teaching and lecturing around the world in corporate finance and managerial accounting here at the University of Luxembourg. and also at my university that I work with, which is the European Business University of Luxembourg. I also teach applied blockchain technology at the Bremen Hochschule, the Bremen International Graduate Center in Germany. And I'm happy and privileged to also have in my company Mr. Valentino Cremona. And Valentino and I have a little bit of history, and he's one of those that I'll say, I taught you. Am I right?
That's right.
So if I can say, Valentino is an impressive gentleman. He is the co-founder and director of Amdex, the first cryptocurrency provider registered and located on the Amsterdam Stock Exchange, and it provides custody services and crypto asset management. Valentino is well versed in this environment. He comes with an immense amount of information and knowledge. And he is, I won't disclose your wealth here. I think
please don't. Please do not.
But let me just say that he got into this space very early, and he always has a smile on his face. Let me move on to Dr. Nabiu, Hussein Nabiu. He's also a colleague. We've worked together at the University of Luxembourg. And his background is as a postdoctorate in banking and financial law at the University of Luxembourg. And he's a visiting scholar at the University of Amsterdam. And he is an experienced lawyer and seasoned in monetary and banking law, shadow banking, and structured banking and structural reforms. And he's very well versed in legal issues surrounding fintech, blockchain, and cryptocurrencies. And I have had the pleasure of having him come and give my students a talk on papers he has written on central bank digital currencies. So gentlemen, welcome. Welcome. Thank you for being here. And I want to just kick the ball off by asking a few questions. I think, let me just have some disclosure. Do you hold cryptocurrency? Please.
Yes.
I think that
Yes, I do too.
Okay. So and I do too. So we have to at least have some sense of disclosure. And would you like to disclose what you hold? Is that something you can do?
I'm 95, perhaps 98% Bitcoin.
Okay.
All right. Yeah. Well, until recently I was mainly shitcoins, and I'm just now rotating into Bitcoin as the pumps are starting.
Okay. I actually rotated out of Bitcoin and I rotated into Cardano.
Okay.
But I've had a host of course, historically, a host of other coins. I won't call them the SH, but coins that were good, were bad. But that is, at least we have some disclosure. So we are vested and we do have some bias in that respect. So we are aware. So let me start with you, Mr. Cremona. Let's just call it Valentino. Let's call you Valentino.
For sure. Yeah.
Why is blockchain, why is crypto so important, and should we care?
I think actually the best part about crypto that you get to see is it makes everything transparent. So all of a sudden, now we're getting to see how systems operate from within by seeing transactions flow, and everyone's looking at it and thinking like, what the heck is going on there? So the beautiful thing I think about crypto is that it makes everything, or very many things, very transparent. So you get to have accountability down the line of people. If the misappropriate spending, for example, you have the no trust, algorithmic trust, if you will, right? That I don't have to trust you, that if you send me a Bitcoin, that'll arrive. That's part of the network. It'll get there. It's been doing so for the last 10 years. And the beauty of removing the middleman, like one of the things that you'll see is now the NFT hype, right? and it's completely putting art upside down. Of course, this is nothing new. In crypto, we knew that this was one of the applications already like 3-4 years ago. But now you see the world waking up to one of these applications. And then again, like what you have you have a logging system, a ledger where you know who owned the art at what stage, you know it's the original, you know it's not a fraud, you don't have to give away 20-30% commissions per selling. Like there's various benefits to a lot of this technology.
You mentioned
It makes it more efficient, right? You have
Right.
24/7-hour trading. I mean, in traditional stocks, you're looking at closing and opening times and people devising strategies around around that even. But yeah, you have a 24/7 market that never sleeps, and yeah, you don't have to wake up and be like short liquidated and forced to send back money to the brokerage because it closed above your stop. Yeah,
You mentioned NFTs
yeah,
and non-fungible tokens.
right.
Now, for the audience who think you're talking Greek, can
Yeah.
you perhaps try and illustrate a little bit of what this really means?
Yeah, so you have you have the fungible token. Fungibility means you can exchange one for one, and they're supposed to be the same. Like they're you can't tell which one is one, and they're all part of this great pool. Fungibility essentially, and non-fungible means they're unique. So one is a token, and it has a specific hash, and you can only use that uniquely, as in you can only sell and buy that once. It's not you cannot exchange it for another NFT, for example, of the same kind. So it just means that it's a unique token, right? That's all it means, really.
So, for example, if I were to take that example you gave, if I were to, for example, say, or that explanation you gave, if I were to say that if I had €1 and I exchange €1 for €1, that is fungible. And Bitcoins can be exchanged for euros, that is fungible. But if I am gaming and using tokens in the gaming sector, I cannot exchange those gaming tokens for yens because they don't translate.
I mean, you could theoretically, but in this specific case, an NFT is, for example, linked to a weapon or a clothing item or all kinds of gear, right? That people have, because as you know, like gamers, they play games and they invest like massive amounts of time and they level up the characters. At the end of it, they just have to quit the game. This way, you can actually just resell your character or your whatever you've worked for. You can actually turn it into human capital, right? Like you can actually turn it into working capital. Yeah.
And I think if I'm not mistaken, I've seen NFTs being used for art recently.
Yeah.
Bansky piece of art was recently burnt, and the idea was, well, now the asset has, through ether, or well, no, I don't want to say ether in that respect, but through a transformation process, been transferred over to the NFT. Now, have you heard of Kings of Leon? They're a band.
Yeah. They're all the artists are coming on doing their sound clip NFTs. It's really cool. You could, for example, like program royalty distribution into certain like songs. For example, you could get like revenue streams from buying the royalties of the song down the line. I mean, there's so much to be done, but essentially the biggest learning I would say is don't buy an NFT that is a random picture from the internet that someone just put up there. It's not going to be worth value soon. You're going to end up sitting on a useless NFT and you spend a lot of money. The ones that will have value are probably one of the earliest edition, like Beeple. He's going to become like the most famous NFT artist in this game. I'm pretty sure his work will.
Jack Dorsey's tweet, the first tweet. Is that really worth 2 million? Or
no, it's not. But Justin Sun, who owns the Tron Foundation, which is one of the biggest crypto marketeers out of China, who has just way too much money, is my age also, and has been involved in various sketchy activities. He's the guy that bought it for 2 million. So I mean, that's not a really relevant market price, I would say. Nobody else is going to do that.
So NFTs, you've heard it here first. We need to be aware that there's a new trend in this space called non-fungible tokens. And how will it affect this space and beyond?
It's bringing more awareness to the space, actually, in fact, because people sold this record art breaking auction for 69.3 million, which is like one of the biggest bidding prices ever for any artwork. I think Salvador Dali was up there, and Picasso could be. I think it was like 3 pieces of 3 artists in that range, you know, and he's one of them now. So yeah, it's definitely creating more awareness, I would say.
Okay. Well, it made me aware of the banana on the wall that sold for 100,000. You laugh, but it was eaten. But that's a whole different topic. All right, regulation and ETFs. This is quite an interesting topic here because Canada has issued an exchange-traded fund. Any thoughts on regulation that we can discuss here? Because this is one of the issues, isn't it? In my view, from what I understand, you said the word or the phrase you used was wild, wild west. Is regulation not healthy? Or should we not? I mean, if we think about it, this is a highway. We need traffic lights, we need signals, we need signs. Right now, it's a speedway with everybody moving very fast in all directions, correct? Any thoughts, Hussein?
I mean, okay, for sure, there are some need for regulation. Of course, that there has been a lot of abuses in the crypto asset industry. There were some uses for criminal activity and things like that. And I personally believe that some regulations, whether to actually, just a moment, sorry, I was a little bit. Yeah, I'm sure that some regulation is due. Yeah, at the European Union level, we had a regulation, actually a proposal for a comprehensive regulation called MiCA, Markets in Crypto Assets. And this is, we have to, let me just introduce this regulation in a few minutes, and then we could actually talk about whether it is a good regulation, bad regulation, what kind of consequences it may have. We have to note that it is a regulation. It is directly applicable to the member states. There's no need for incorporation and things like that. And it is part of a package, digital single market package, which tries to actually create a frictionless market in digital assets at the European Union level. So I went through the regulation. What I realized, it actually tries to balance the innovative aspects of crypto assets and the need for regulation. It is a very, very hard, very difficult exercise in that term. And its main aim is to actually enhance the legal certainty, clarity, see what these crypto assets are, how they could be issued and things like that, how they could be distributed within the European Union. So its scope, actually what it does, it regulates crypto assets, asset reference tokens, and e-money tokens. Crypto assets, we know what they are. They are defined as sort of digital representation of value or rights that may be stored on a blockchain or DLT or a similar kind of technology. But asset reference tokens and e-money tokens, they are referring to stable coins that we have. We had various types of stable coins, and this is an attempt to actually regulate the issuance of stable coins at the European level. Certain products, of course, are excluded from this directive. They are like financial instruments that are defined in some regulations at the EU level, like MiFID II, like securities, derivatives, and things like that. Then e-money deposits, structured deposits, securitization, and also there are some carve-outs for certain issuance of crypto assets, like for qualified investors and things like that. This is basically copied from various the substantive rules in this piece of proposal for regulation actually is an amalgamation of a lot of rules from different parts of the financial system. We have borrowed some concepts from the CRD4, Capital Requirements Directive, from MiFID, UCITS, alternative investment fund, like hedge funds.
Custodianship also.
Sorry?
Custodianship as well.
Exactly, custodianships and all the e-money directive, market abuse directive. We have borrowed all those concepts and we are trying to apply to the crypto asset market. So in terms of its substantive rules, it tries to regulate the issuance and admission to trading of crypto assets. It requires certain types of authorization and supervision and applies certain prudential rules specifically for stable coins and e-money tokens. And even it requires a sort of orderly wind down plans that we have in Bank Recovery and Resolution Directive. It borrows from there and tries to make all those crypto asset issuers or service providers actually to have that kind of winding down plans for the issuance. It has some consumer protection rules and also some market integrity rules that actually tries to deal with the insider dealing and market manipulation in the crypto assets markets. In terms of regulation of stable coins, I would say that it tries to actually regulate the stable coins based on the model that is borrowed from money market funds, like portfolio restriction rules, concentration limits, cash reserves, like NAV buffer that we have in money market funds and things like that. So it tries to have all these regulations. It tries to borrow all those regulations from different parts of financial system and apply to the rules and regulations. And I would say it is a regulation that actually divides the community. Some people welcome it because it is an attempt to create a single digital market, provide the legal certainty to the issuers or service providers and all other participants. But on the other hand, there are some other stuff that might make the industry participants a little bit wary. But that was the introduction. If you have any specific questions, I could go on.
Yeah, let me ask you this burning question. Where are we with respect to MiCA? I mean, at this stage, I know the Financial Sector Supervisory Commission is here in Luxembourg is looking at sending in a proposal because
INATBA is working on it big time.
Is that right? Okay.
Yeah, they're the ones that we're actually part of INATBA. It's the International Trade Association for Blockchain Coalition in Europe, and they go over MiCA, and we can actually give feedback to the MiCA regulators every now and then.
Is there a timeline?
Coming in this, I think the plan is this year sometime.
I think it is a timeline, but I haven't checked the legislative history. If you go to the European Commission's website, all these proposals for regulations, they have a legislative history, and it shows exactly right now at what stage it is. But I haven't checked it myself to see.
The last time I checked, it was just a very, very brief blurb that did not say very much at all.
Okay.
And my question is really, what is the timeline? Because this is, of course, very interesting for anybody in this space, correct?
Exactly, yes. It's a sweeping regulation, basically. You know, we didn't have that kind of regulation before. We had some amendments to different kinds of regulation beforehand, so like market abuse regulations or other laws and regulations that we had, but we didn't have a specific regulation or directive or any other legislative piece specific at the European level, specifically dealing with crypto assets. And this is the first one.
If I may, in tandem with this discussion is, of course, CBDCs, central bank digital currencies.
Yes.
What is the current state of CBDCs? I mean, we know about China, and we know about the sand dollar in the Bahamas already being active as the first nation to already have a central bank digital currency in place. What is the current state and the future of CBDCs? We know it's permissioned, not permissionless. We know that perhaps there's going to be a decision coming soon for the European. Christine Lagarde made a statement not too long ago that was quite indicative of a foregone conclusion. But any thoughts on this?
I mean, they're gonna,
Valentino, do you want?
yeah, they're gonna, they will introduce it anyways, but I really don't see the big debate. I mean, it's like CBDC is great. It's a buzzword, but what is it in the end? I mean, great, you're using everything. Nothing is going to change for the user's interface. Let's put it that way. Like for the user using it, they will not feel any difference, right? But in terms of the infrastructure in the back, you'll just have more flexibility, if you will. You could, for example, like, you could run analysis on every user's wallet, see what kind of income bracket they are. If there's some sort of economic situation, there's a trouble, you could airdrop to the poorest class. You do that by the instance of a button. What you have is then like more monetary and fiscal policy, probably for
Targeted
different
monetary
types
policy.
of industries. Huh?
Targeted monetary policy, for example.
Yeah, for each kind of like income bracket, or it's just going to be more customizable, if you will, right? At least that's what I see happening. And you have your retail and wholesale CBDCs, right? They both fulfill a different function, but yeah, it could also, it'll just increase the complexity, in my opinion. But in terms of like the user, us using it, it's not going to be any difference. You still have the app. It's all digital anyways already, right? I mean, yeah.
Are CBDCs will they arrive? Is the hand being forced?
Yeah, I mean, Bank of International Settlements, right? They're like very proactive on this as well. I'm sure you know more about this, Hussein.
Yeah, thanks a lot. Thanks for the great introduction. I agree with you generally on this. It is, in my view, also introducing a CBDC is not a very, very big deal. It might be a big deal depending on the design features of the CBDC, central bank digital currency. Of course, you know, everything, perhaps everything is dependent on the design features, whether we could have a permissionless ledger, ledger, wholesale CBDC, retail, or account-based, or value-based, or token-based, things like that, whether it is going to substitute cash and other cryptocurrencies and or complement it, and what kind of anonymity levels we would have. So
yeah,
all these are very, very big questions, and most right now I checked the most recent applications. Actually, they're called proof of concepts. Right now, most of them are in the proof of concepts phase, and even in China, that is trying to actually sort of test the waters in this. What I can see, China, in terms of design features, it has opted for account-based CBDC, which is targeted towards retail users, and its blockchain is permissioned, and it says that it provides certain levels of anonymity. So it is called a tier or managed, or I think it is called manageable anonymity. So you can have a managed, so you cannot really trust that kind of anonymity, right? So that I agree with you. So, but they say that it is managed. Users can opt for that kind of managed. Like the anonymity is at the user's level. You know, when I'm transacting, for example, with you, James, I might not know that I'm really transacting with you, but a regulator, but a central bank, and other service providers that are intermediaries over here, they might actually know what's going on, who transacts with whom. So it really depends. Like, and also in terms of cost efficiency, things like that. I think in certain countries, like in the Bahamas, you know, it's an archipelago, so a lot of islands there. So if you introduce the CBDC that could replace the cash that is issued by central bank, actually you can save a lot of money. Why? In terms of transport of the cash and things like that. that is not digital, because there are all islands and you have to distribute. Sometimes there are liquidity crisis somewhere. You have to put some cash here. Liquidity management of cash could be a little bit difficult. In China, I've realized that there's another problem, that central bank of China is a little bit more keen or keener to introduce this kind of CBDC, and that is the duopolistic payment market that is in China right now.
And if I can jump on that note and ask you,
yes,
as a lawyer, what are the legal challenges of introducing a CBDC here in Europe?
In Europe,
countries, yes.
Yes, in Europe also we have some legal challenges. I've written on that a little bit. Most legal challenges goes to the authority of the European central banks in issuing central bank digital currency. In the TFEU, which is the constitutional document that of Europe, which is the Constitution of Europe, it is like Treaty on the Functioning of the European Union, central banks is allowed to issue banknotes and coins. So banknotes and coins. So that is what is allowed for for the ECB to issue. We really don't know, in terms of interpretation, whether a central bank digital currency could actually be qualified or interpreted as banknotes or coins. So it is an if. We really don't know. Of course, European Central Bank believes that it has the authority to issue, and in many of its opinions, even I was reading its opinion on the MiCA, I realized that they strongly believe that they have that kind of authority. Aside from that, there are some consequences for issuing central bank digital currencies that might actually go against the very purpose of central banking at the European level, at the Eurozone. Eurozone central bank is actually is a sort of is a central bank, the main objective of which is price stability. Of course, after price stability, there are some arguments about it, but it comes financial stability and things like that. And of course, there is another there's another statement at the TFEU, Treaty on the Functioning of the European Union. I guess it's Article 124, that says that central bank, European Central Bank, should actually respect I can't exactly remember the wording, respect the market economy, something like that, and decentralized resource allocation. And that is, I think, it is very important, because if we issue CBDC, one impact would be that actually you put financial disintermediation. The impact would be financial disintermediation. With financial disintermediation, what we mean is that actually you actually cut the banking system out of the process of money creation. And what a banking system does, actually, they create money in a decentralized way. It's the mechanism for creation of money in a decentralized way by making loans. So
you're referring to fractional banking and credit creation.
Yes, credit creation.
And broad
yes.
money, not
broad money. Yeah, it is not
broad money.
M0, it is M1, and yes.
Correct. So the loan is where the
exactly
being created, not
yes.
in the central bank itself, but the broad money.
Yes. Yeah. The broad money, which actually there are estimates that 97 or almost 96.7% of the money in circulation. Cash and banknotes are very, very small part of the money that we use day by day in any society. So it actually might lead to certain levels of centralization, especially in resource allocation. That could go against the TFEU. So as I said, everything depends on the design feature. If central bank digital currency is designed in a way that would cut out the intermediaries, banking system, it might actually end up or contribute to more centralization in the economy that is not okay if we see in the constitutional documents, in accordance to the constitutional documents. And of course, there are other issues that, related to financial stability. If you provide like the masses in terms of central bank digital currency that is retail, if it provides accounts to masses in the central bank, what would happen? Again, people might actually use that kind of currency because that would be the safest asset in the financial market. And in the future, it might actually increase the financial instability in the system, especially in times of distress, because commercial bank money that we use day by day, deposits that we have in the banking system, and the credit that we have in our accounts, that is the money that actually has a little bit of a risk inside it, embedded in it. And that is a counterparty risk that you have against the commercial bank. Of course, the risk is very limited, especially because of the deposit insurance, but you still have that kind of risk. If central bank digital currency, the issuance of central bank digital currency would lead to certain levels of financial instability in terms of flight to safety, people migrating from commercial banks, getting their deposits from commercial banks out and putting them with the central banks, that could also actually contribute to financial stability. That is a sort of not an explicit mandate, but an implicit mandate for most central banks, and some people believe that even for the European central banks as well.
When you mention flight to safety, if I can just segue here a little bit, because I'm keen on a question that has also been asked quite often. To what extent would the PBOC, the People's Bank of China's role in a digital yuan pose a threat to the dollar dominance? Is this something of discussion? Is this something worthy of consideration?
Some people actually discuss about it, but I'm not really sure that it would actually do anything to the dollar domination, because the CBDC that is issued in China is a domestic thing, and the denomination is the renminbi or yuan, whatever they call it. So the denomination is yuan, and we know that there are capital controls in China. It is not like the US or Europe that they don't have this capital controls. So where you have a capital controls, you really cannot claim that I'm going to challenge the reserve status of a dominant currency. So I think if you really are very, very serious about this, you have to remove the capital controls, and you have to let your currency really float without really without actively managing it.
Thank you very much. Valentino, any final thoughts on CBDCs?
Yeah, I wanted to ask, what's the insurance deposit in Europe? Because I know the FDIC has it in the US, and I think it's up to like $500,000 per account only. Right?
Yes, in the US it is like 250,000.
No, it's $500,000. In the US it's $500,000. I looked it up.
No. In the US it's 250,000.
All right. And here it's 100, right? Here it's 100.
Yes, it is 100,000. It is per account, per customer. So it is like that. You can have like 100 accounts in different banks, and all of them being
insured. They give you the haircut. They shave you off.
Yes. And also there's something that there's something called brokers deposits that, actually there are some firms that are brokering those deposits. You are putting your money with that kind of firm, and it distributes among like 100, 200 banks, and all of them are insured, but you are dealing with just one brokerage firm. So it is like that. So there are a lot of ways that you can ensure that your money will not be gone if bank goes bankrupt. So
hold Bitcoin.
And just
That
and
could
just
be an
for,
option.
and just for the for the audience, FDIC is your Federal Deposit Insurance, right?
Corporation. Yes.
Just so that we
That means that when there's a default on the bank, they guarantee you that amount you get back. That's basically what it means.
precisely.
Yes. 100.
And talking about Bitcoin, since you brought this up, Valentino, I mean, I have a burning question here with respect to this currency. What is the future of Bitcoin as a first generation blockchain? It's a script. Where are we going with this?
Biggest use case, store value.
One line.
You don't even need anything else. You don't literally, you don't need right now. That's good for Bitcoin. If it then evolves into, let's say, a world reserve currency down the line, we don't know. Might happen. Don't know. There's usually 100-year cycle shifts. I think it began with what was it? The Great British Pound. No, the Dutch started. The Portuguese had it at some point. The Spanish had it. Then the US at the end, right? So, I mean, there was like 5 world reserve currencies in the last 400, 500 years. The dollar is nearing its end of life cycle, although funny enough, CBDCs are probably going to extend its life cycle. But down the road, I also don't see the dollar staying there forever. I don't see that happening. So, I mean, at some point, it could be that there's something like Bitcoin going down, but that might still take a long time, and you're going to need a way bigger growth of the market for that. But it could be a possibility down the line.
I mean, when you have, I mean, I've seen, of course, MicroStrategies, Ray Dalio. You have all these really heavy hitters out there, hedge fund, and Kathy Wood with ARK Investments, and then you have a 169-year-old company, Old Mutual, Massachusetts, invested. I mean, they really follow.
BlackRock's coming in. They're all coming in, man. Like every single one is coming in. So,
but is this going to take out the little guy? Are these guys just going to walk out and leave the little guy hanging?
it's possible. Yeah, very much possible. It could be that it becomes a big boys game only, and all the people that do hold Bitcoin, they have their price where they exit. Say Bitcoin becomes a $10 trillion asset. Let's hypothesize, right? Let's say, okay, it took it 11 years to go from 0 to 1 trillion, hardest part. Now it's become a significant asset class amongst the others. It's probably just going to grow. I predict that in the next 5 years, it'll capture probably another 9 trillion. 5 to 10 years, it'll times 10 from here. It'll probably capture 10 trillion. And then arguably you can say that down the line, given that there's such irresponsible fiscal monetary policy from central banks, it could be that people resort to wanting that as a store of value, that they opt for it, that it becomes, let's say, the reserve currency, if you will. It's a hypothetical example, which is probably has like a 5% success rate, let's say. But if that happens down the line, what you will see is that everything in Bitcoin, the market capitalization of Bitcoin should express everything else out there, right? That's one of the super cycle examples that really sophisticated people in the space are talking about. Like their price predictions are, I mean, I'm conservative when I say 200,000 on the peak of the cycle, but the super cycle says like we might max out at 1 to 2 million because the spending of or this money printing from central governments is just getting so out of hand, right? They just, I mean, it was, what was it? Obama printed, I don't know how many billions at the time. I think in 2008, Federal Reserve balance sheet was 800 billion. And I can call up the chart somewhere here. And it was 4.3 trillion before we exponentially rose now, before the March 18th crisis. So after the March 18th crisis, I think the Federal Reserve like doubled their balance sheet almost. It's unbelievable. So you're talking about like 40-50% of all of dollars in circulation coming in through this one event. And what you see is that they keep having to offset the debt, right? Which means they need to print more and more because this pile keeps getting bigger. So in order to bail out more of the pile, you need to create more also, right? So it's this death trap of what they're doing. I don't know what the heck they're trying to solve, but it's not getting fixed with their policies. Basically, it's just 10 years ago, we thought it would get better. It's worse now. And I'm going to say 10 years down the line, it's probably going to be even worse. So that's my opinion, basically, about what's going on.
Fair enough. What's going to stop Bitcoin? What can stop it? Quantum supremacy, Google's quantum computer. I mean, you know, we know that they've achieved it in trial, and of course.
Yeah.
But what'll stop Bitcoin?
Yeah, there was certain risks at some point. There was a Sybil attack. There was like a 51% attack. There was regulation that could hamstring it. But like, I mean, I've built the first regulated brokerage in the Netherlands, right? That is regulated by the central bank here, not national bank, sorry, the Dutch National Bank, and here essentially what you see is that it's fully being adopted all over. Of course, there's no passporting in Europe yet. Yes, every single country is doing their own thing. We're implementing fifth AMLD directives, and that's combating anti-money laundering. That's the main thing that they care about. It's all about anti-money laundering. That's the majority of things. If you swap fiat euros into digital currencies and backwards and you store them. But yeah, I see this going in a symbiotic way next to fiat government currencies. Bitcoin will be there. There will be fiat currencies. There will be stable coins. A lot of value will be transmitted over there. Decentralized finance is a huge thing that's happening that people are not paying attention to. Regulation is absolutely not able to stay up to speed at all with what's going on there. Like, absolutely not. They are hammering out like financial institutions like no tomorrow. They're essentially creating it. A bunch of people, open source, come together. They build financial institutions. They merge financial institutions on a weekly basis together and building this incredible ecosystem where it's actually for the retail person to, for example, take out loans, right? Lend money, you're getting the rates yourself. You can get crazy APYs in crypto because there is not that much capital going around. So the cost of capital in a market that's inefficient is higher. People are willing to pay more in order to borrow more capital in this market. So that's why you're seeing like 15, 20% yields per year just on holding a stable coin to borrow it out, right? To lend it out, as in, people will borrow it for that kind of rate. So I just see more and more capital moving to the space, especially with negative interest rates now. I mean, like, where are you going to make your percentages? How are you going to protect yourself against the purchasing power destruction, essentially, right? I mean, if you want to look back and take a one-on-one example, you can, Bitcoin, I always say Bitcoin is like the mirror in the wall to money creation, right? You're looking at a mirror in terms of the money creation. It just goes up. The value of Bitcoin itself is not going that high in that sense, but it's more that there's so much influx of new money coming into the system. Some of it finds its way in Bitcoin, and then it expresses itself in a larger dollar value, even though the value respectively to five years ago could arguably be worth less based on the dilution of money coming in, right? So there's all these factors of everything that has underlying value right now is just skyrocketing upwards because money's going where there's value and where it can be retained, right? Where
a lot of these financial institutions and their approaches to hedging against inflation, they're just circling the drain, basically. Is that what you're saying? So DeFi is where it's happening. Now, what?
This is where it's happening. I mean, like the big institutions, like, of course, they're going to come to Bitcoin. Why not? You have a 200% compounded annual growth rate for the last 11 years.
I think Michael Saylor said it well. He said his portfolio is basically a giant block of melting ice.
Yeah,
and that was really apt.
Large capital, like how are you gonna adjusted inflation, say let's 2% a year, right? Whatever, let's just say it's 2% a year. Like if you have billions, that's a lot, right? You need to somewhere you need to get those returns. And you're not getting them in the traditional market that much.
Tell me about gold and silver and its hedge against and its competition to. I know, of course, we know portability and everything, of course.
I mean,
but,
you have cash. Wait, James,
the
one last thing. You have cash and carry strategies that are risk-free in Bitcoin at a 20% annual return. 20%. Like, tell me anywhere else where you can get cash and carry strategies with no risk at 20% yield a year. Like, you just don't have it. And that's actually what's happening in this market. So people just aren't aware of it.
Gentlemen, if I could interrupt for a moment. We have a lot of questions in the chat room, and if I could redirect you to those, we have 12 minutes left.
Thank you very much. We'll certainly come to the questions. There are a couple of burning questions that I have to put forward here, especially to Valentino. And again, let me just say that the European Business University is very proud to have everybody here present. Valentino Cremona, Hussein Nabiyu are also members of our faculty. And we do offer courses and programs around blockchain, data science, AI. Please take a look at our programs. Ethereum gas fees, Ethereum improvement plan, EIP 1599. Is this the solution? There's some doubters.
Amazing.
Give me your Reader's Digest version.
Basically, they're stopping inflation. The network accrues the extra fees and gets the value from that. So they're burning supply as it goes down. So basically, they're making it a scarce token over time. The more the network is being used, the more the fees are being burned. Currently, they're going to miners. I don't know why the miners, everyone's like, why the hell are miners getting the value of the network? The network should get the value of the network. And that's what's going to happen. So the fees will be burned, and then Ethereum will get scarcer from there on out. So it doesn't have that inflationary schedule anymore.
Polkadot interoperability. What's the excitement?
Amazing. Parachains are the future. You definitely want to be exposed and looking at Polkadot. Gavin Wood was the founder of Ethereum. He then moved on very quickly because he realized the technical limitations of that protocol that he built at Ethereum. What he did is to basically build a better Ethereum, and it's called Polkadot. And that's what Polkadot is in a nutshell.
Charles Hoskinson was also a founder of Ethereum. Cardano, there's some prospects for Goguen coming out, being launched on March 31st. Any thoughts?
Yeah, I'm not very big on Cardano. I still know they still don't have smart contracts, so I'm just waiting for that.
March 31st.
Yeah, so that's what we're waiting for. Yeah. But that should bring some fire to the ecosystem for sure.
Okay, on account of time, I do have to start wrapping this up so we can go to some of the questions. Would you give me a 5-year prediction on AI, data science, blockchain? Hussein, your 5-year prediction. Where are we going to be 5 years from now?
Oh my God, I'm not really a specialist on them. I really cannot give you any advice or prediction or anything like that about perhaps on decentralized finance, maybe,
sure,
but on AI and things like that. So I'm a techno optimist guy. So I'm pretty optimist about the decentralized finance at large. So decentralization, censorship resistant system, I guess in the future, they would provide some real good value to the society, and they will be up and running. Some variants of DLTs, blockchain technology, definitely will be used in the traditional financial market infrastructures for securities clearing and settlement systems, and maybe for notarial purposes. I would say I'm a little bit rather pessimistic about the CBDC. Even if they would be used, I would say that it would not really contribute to the welfare of the society at large because of the push towards centralization. I would, if I were somebody, which I'm not yet, I would definitely advise against using CBDC for most cases. Of course, everything is relative, depends on the design features, but overall, I think the harm that we may have from the CBDC might outweigh the benefits.
Thank you. Valentino, where do you see us 5 years from now?
Yeah, again, I also the AI and the other
blockchain.
I'm not qualified to speak at all about, but blockchain, I can give you my opinion. I mean, I've seen it develop over the last 10 years, and I really didn't think we're gonna end up where we are now. I think we just get an acceleration phase now. I think the next 5 years, it's gonna go from 1 to 10 trillion Bitcoin, that is. I think decentralized finance is going to capture massive amounts of the market as well. People won't see it coming. Right now, the user interfaces are a bit wonky and stuff, but like once they really make it seamless, user-friendly, interoperable with everything, most people are going to be on DeFi without even knowing it. And banks are going down the drain. Banks are dead. They're just private banks are dying, everything, like nobody needs a bank anymore. Why the heck do I need permission from my bank to send the kind of money that's mine at any point in time when I want? Also, if I want to send it on a weekend and I need it to be there in 3 minutes, I can do that now by myself, right? Like, why the heck do I even need a bank for that? So I see banks losing relevance over time.
So you ascribe to the position that banking is necessary, but banks are not.
Yeah, banks are not necessary. Like, there will be plenty of decentralized applications that mimic banks where you can just do whatever the heck you want with your money without any of the permissions. So yeah.
Thank you. Thank you. I do have a question from Pierre Alozzi. How can NFTs be applied to or photographers in terms of usage and distribution? Any quick thoughts?
Say that again. Sorry.
How can NFTs be applied to for photographers or to photography?
Oh, I mean, you could, if you, for example, have a picture and it's yours, you could link it to that NFT and you could sell it. Of course, it needs to be linked to the real life object. Otherwise, the NFT by itself won't have much value. So it needs to be linked, but you could make your pictures unique. So every picture, for example, copywriting with pictures is big, right? So you put it somewhere and then people just steal your picture. This way you could identify that you are the rightful owner of the real original.
Okay, thank you. And I have another question from Henry. To what extent should an investor be concerned about the breadth of market debt, basically, when investing in Bitcoins against the background of the recent volatility? So if you have a lot of market debt, should there be a concern?
You mean from central banks? The
The
balance sheet. So I'm guessing the question is if the debt on balance sheet keeps growing. Yeah, if that keeps going, then you definitely want to hedge with Bitcoin. That's what it's invented for. It's invented to protect your purchasing power against irresponsible fiscal and monetary policy. That's why it was invented.
Thank you. I have a question from Patrizio Zimbrone, former student. Fiat currency being replaced by crypto. What power does that leave the government, and would they allow it, Hussein?
I think it is a pretty unlikely scenario that it would eliminate the fiat currency. I mean, at large. If it does, of course, it might actually reduce a lot of power that government has, like in terms of setting or adjusting the interest rate or the creation of money and things like that in the society, providing liquidity at certain points of times in the crisis and things like that. So I guess it will create a lot of problems for the government, but it is a very unlikely scenario at large, especially given the governments also are trying to come up with their own solutions, like CBDC, or what happened after these decentralized finance activities. We see that there's a lot of urge and push inside the government and central banks actually to come up with real-time payments and not settlement systems yet, but settlements of the cash, of course, but not like in the security settlement system. But they are trying to make operational changes that could really perhaps compete with the crypto in terms of at least an efficiency.
Thank you. And I have a question from Shushma Pandey, who is asking whether CBDCs can actually facilitate banks during crises. And this is what you've been talking about, quite frankly, correct? It does facilitate, provide the facility.
I think CBDCs, central banks will literally get rid of banks. They just drop directly to the people.
Okay. Well, let me come to the next question. From Kirti Joshi. Sustainability has always been an issue. The power, especially with Bitcoin, with respect to proof of work. The amount of energy is immense. Are there concerns on sustainability we need to address?
No, this is mainly a myth. Like most of the Bitcoin network consumes as much energy as the Xbox and PlayStation network daily. So tell all the people to stop playing games because they're not adding anything to society. They're not even giving them a trusted money. So sorry. That's first of all not true. Second of all, most of it is hydro. Like the miners, they move during seasons. So when there's a lot of rainfall, they migrate to hydro energy, and that's virtually free. So as much as they can, they do it with free energy or energy that would be wasted, right? And there's barely like any coal going in. So it's actually quite clean. I actually have a chart here that I specifically had for a question like this, and I can show it. And it's a comparison. It's the comparison of mining of gold versus Bitcoin and stuff like that. I will drop it in the chat for everyone to see.
Thank you.
Oh, I can't for some reason. Oh, well. I will share.
Well,
it
we can pass it on later.
I will share it later, yeah. But yeah, it's very clean, really, compared to what most people think.
Okay, my next question comes from Katie, and it's a little long one, but let me try and see if I can paraphrase it. Why would cryptocurrency conversion and trading be under threat of taxation? When if she, for example, converts her Australian dollars during a currency crash to euros and then converts them back at a higher rate?
That depends on each country and their taxation. Like in the Netherlands, for example, we pay 1.3% capital gain tax on the total holding at the end. We do not trade. We do not pay per trade. I don't know. That really depends on the country and where you live and their rules.
Okay, I'm going to come to a question from Omar. Any other emerging cryptos that are use cases outside of store value?
Yeah, so you have various ones. You have, for example, like medicinal chains for sharing of the confidential information. You can look at any sort of borrowing and lending. You can look at, for example, yeah, what else do we have? NFTs now. You can look at stable coins, yeah, in order to transmit value, right? And remittance, like whatever. There's so many use cases for crypto. It's actually unbelievable.
Okay.
You have to apply
Thank you. I'm just trying to rush here on account of time. I have one from another lawyer in Kenya, Tokero Lekinya. Security and security breaches and all the fraud that's occurring. Is this going to be, are there any, do you know of anything that's taking place to address this going forward?
Yeah, I mean, there's audits that are happening on smart contracts. They're being a bit like wonky at the moment, but like if you get a good smart contract audit and you have a professional team that is serious, then there's very, very minimal risks, or they can be minimized always, right? But yeah, if you're just throwing money blindly into whatever somebody says and you haven't done your research, then that's on you. Then you're being an idiot. Then you deserve to lose money, basically. Then just be a bit smart and look at where you're putting money and don't just throw it anywhere. And definitely not if they say send one, get two back. Do not do that. You know, like don't be a fool, because a fool will be separated from his money very easily in this market.
Thank you. I have a question from Tech Tiger in Nigeria with respect to the central bank. Perhaps this one is for you, Hussein.
Yes.
What do you think will happen to emerging economies like Nigeria, where the government just banned cryptocurrencies due to its impact it's having on the banking system? What do you think will happen?
I really don't know what would actually happen. It is pretty difficult to really ban the decentralized cryptocurrencies. So like banning Bitcoin wouldn't really make sense for anyone. Of course, it could discourage its impact its impact on society and also the users as well. So some people will be discouraged, but I guess we have some regulatory competition at a global level as well that actually tries to put some restraints on countries that try to ban cryptocurrency. So that kind of regulatory competition, for example, like US, perhaps US doesn't want to ban cryptocurrencies because perhaps China is working on it. They think that perhaps there must be some value somewhere that we really don't know, we don't understand, and things like that. So I would say there wouldn't be very huge impact in terms of government banning, other than, discouraging some uses for some cryptocurrencies.
If I do recall, Gary Gensler was just appointed the chairperson or head of the SEC, and he teaches crypto blockchain at MIT,
Yes,
or he used to. So this is very good news for anybody who's an enthusiast, because he is very pro, and I think he used to head the CFTC,
Exactly.
right, the commodity trading features, and so he's now the head of the SEC. So very interesting. I have a question here from Wim Stallmans. Is CBDC interoperable with decentralized permissionless cryptos? I guess it can be.
Sure, it's just like fiat to crypto. You can swap it. I mean, my company does that. You send us euro, and we then swap it for Bitcoin for you.
Okay.
So yeah, and CBDCs are just like a stable coin, so you'll probably be able to do that without a company. Even it'll be a trading pair somewhere, literally.
Okay, and I have a question from John Gashago. What are your thoughts on Radix in the UK? Would you characterize how would you characterize their cryptocurrency platform, if you've heard of Radix?
Yeah, I know them. I know the founder, and yeah, I mean, yeah, it's cool what they're doing, but I don't think they've. Yeah, I'm not. I actually I don't know. I don't have enough knowledge to give a sophisticated opinion about it. To be
Fair
honest.
enough.
Yeah.
Fair enough. And on that note, I think on account of time, we'd really like to thank everybody for their presence here. Let me just remind you, the European Business University has a mission, and our mission is to make education affordable, equitable, and accessible. We focus on women in the foremost, and we try and make sure that we reach those people around the world who do not have quality education. And join us in our mission, because we're trying to do something that's bigger than all of us. Thank you very much, Hussein, for your time.
Thank you. Thanks a lot for having me, and thanks a lot, all the audience and listeners here. Thanks a lot for participation.
Thank you, Valentino.
I enjoyed it.
Yeah, thanks, guys. And Robert, I saw that you asked a question. I tried to answer it. I was talking about the market capitalization of Bitcoin. So just in case you missed it.
I think there was a question.
Yeah, you asked what 1 trillion to 10 trillion. What I meant the market capitalization of Bitcoin is now 1 trillion, and when it reaches 10 trillion, that's my prediction in the next 5 years. Yeah.
All right. Well, thank you again, everybody, and we'll see you when we see you.
Thank you so much. Have a nice evening, everybody.
Thank you. Bye-bye.
Bye-bye.
Bye. If you guys want anything, just reach out to me on LinkedIn or something. If you have a question, I'm happy to answer it also.
Me too. Exactly. Right. Thank you. Bye-bye.
Thank you, everyone. And that concludes our meeting for this today. You can see this recording on EBU Network Hub YouTube channel.